If you work for a publicly traded company and you're highly compensated and or highly valued, you might find yourself the recipient of some restricted stock unit awards. And if you remain a highly compensated and highly valued employee, you might very well find yourself having a very concentrated portfolio because you've been awarded these RSUs consistently for decades. As a result, we need to consider when we should take some of these RSUs off the table. That is both a financial planning question as well as a stock sale timing question. So let's look at it from both angles. First, on the screen, we have a stock that's going to remain nameless because it really doesn't matter what the stock is. These principles apply no matter what. But the last time I did this analysis for this particular stock was right here on November 5th. Now we can see how the stock has recovered. But at the time I did this last analysis, that's what the stock chart looked like. And my recommendation to that particular client was consider taking this off the table now. Why? Well, because we're in a downtrend here. We made some new highs over here, but the stock has not been able to sustain that. And now we're in a short-term downtrend. Since the client had some financial planning reasons to take the stock off the table, that was my recommendation. Now, we believe the client is going to get more RSUs over time. So again, from a financial planning standpoint, that's the reason, one of the contributing reasons why we would make that recommendation. Fast forward to today, and we can see that the stock has recovered. We have a new grant that we expect in the not so distant future. And so what should we do now? Well, now my recommendation is to hold and consider putting in some stop orders for this particular client for some portion of those RSUs. Why? Well, because we see a very classic pattern. This is what some would call a cup with handle pattern that was formed, and the stock reacted like we would expect it to react. It doesn't mean it's always going to happen, but this stock popped out. In the last couple of days, it has consolidated. Now, I should show you this chart with volume in it, because what happened is these 2 days here popped out of that pattern on very high volume, but the last couple of days it has retraced on very low volume. That is an encouraging sign. Now, when we also look at the longer term perspective for this particular stock, the next level of resistance is about 5 to 6% away. When we factor in the seasonality period, maybe it makes sense to hold just a little longer. This is our seasonality chart for the S&P 500, and we can see that this February has been relatively good, but by normal standards, February is a pretty weak month. If we break that down onto a weekly basis, this is the same data, but this time it's just for February, and this is where we're at right here, currently Snowmageddon in the Raleigh-Durham area. But if we fast forward into March, we can see that the seasonality chart gets a lot better. So from a financial planning standpoint, we may still want to take the stock off the table. But if we can hold for a couple extra weeks, the wind might very well be at our back, and we might be able to get a little bit more upside momentum. So the recommendation to the client was consider putting in a stop order for X numbers of shares, and we might even do a 50% stop order here and a 50% stop order right below that. Anyway, hope that helps. If you have any questions, by all means, feel free to reach out to me or my team.